Gautam Trivedi joins us now, and let's take a conversation forward with him. Gautam, looking at the pull and the push of the market, what do you make of the current market condition? Are we in for stable days or volatile days?
I think we're still in for volatile days. Let's not forget, it's great that President Trump is back in the White House. Seems to be a lot of positivity around that. But the reality is that I think we still have 2.5 months to go before the swearing in on Jan 20th. And it's not as if he's going to do something major the very next day. So realistically, we're not going to expect any major announcements between now and the next 3 to 3.5 months from the new administration. So I think we have a period of volatility that's going to still extend into January end. And I think the China factor, again, story floating in the markets is a big announcement today from the Chinese government. So if that were to come through, will foreigners still continue to put money into China and as a result sell India? So I think the bigger question really is how much more foreign selling is left and what is India's ability to absorb that foreign selling?
The way to understand it. What is the way to understand that how much more foreign selling is left? Foreign selling was a function of money moving into China. It was a function of rich valuations. Both those factors are now getting addressed. So then why are they still selling?
I think let's understand one thing. The total amount of foreign holding as of the 26th of September, which is when the selling actually began, was about $1 trillion. They've sold since then roughly about 12.5 to 13 billion. That's only 1.2, 1.3% of their total holding. It's a very tiny amount in the big scheme of things. So realistically, taking that much money off the table is really not a big deal. Question is, if they were to take that figure of 1.3, 1.4 to 2.5 or 3% of their total holdings, then I think we have a situation where the market could trend down further.
A possibility? Should we start preparing portfolios with the assumption that this raft of selling will only intensify?
No, I'm not suggesting that under any circumstances. I'm not saying they will sell more because they've sold as much as they have over the past 3.5 to 4 weeks. But the reality is that we are still the most expensive market we have been. There was no real significant alternative within the EM space to India until China happened 5-6 weeks ago. So like I said, a lot is going to depend on what the Chinese government announces today and over the next few days in terms of policy initiatives to boost and stimulate their economy. So if something concrete does come out, which is what everyone's been waiting for, then I think we have a near-term issue with respect to foreign selling continuing into the Indian market.
Hi, morning. Given that you flagged off that the earnings have been rather disappointing, confirming the slowdown in consumption, do you believe that now the worst has already been baked in or priced in, or that still earnings is likely to suffer on account of the consumption slowdown going down the line?
It's a very good question because we've been tracking the earnings over the past 3 fiscal years. And I was doing this math only yesterday. I mean, frankly, preparing for this interview. And what I found is that over the past 3 years, and if I look at point to point, second quarter FY22 to second quarter FY25, i.e. the results that have been declared as of last Friday. So this is a week old. The sales growth over that 3-year period has fallen from 25.7% to 7.6%. The EBITDA growth has fallen from 12.9% to 1%. And this is the universe of the BSE 500 stocks. And the net profit growth has fallen from 38.6% to a negative 5.3%. Of course, metals have been partly to blame for that negativity so far. But the point I'm trying to make is there is a consumption-led slowdown in the country. We saw that with auto numbers, except for the month of October. Now, I had a chat with some of the auto retailers and dealers, and they said, we expect this positivity of October to continue into November and December. But historically, do remember that November or the month right after Diwali has been a very, very weak month. It's in fact been the weakest month of the entire fiscal year. But having said that, I think we're starting to see some green shoots of urban consumption return. I've spoken to a bunch of retailers as well, and they're starting to see great footfalls and sales over the week, over the longer weekends. So I hope and I'm optimistic that this trend continues. And also, let's not forget the big story about the wedding season. 4.8 million weddings over the next 2 months, the highest number of auspicious wedding dates in a decade. So hopefully that should unleash, as the CAIT is estimating, 6 lakh crores of spending. So again, big booster for the economy.
Actually, right, Gautam, Mahindra and Mahindra increased their guidance. October car numbers, FADA told us 25-30% uptake. Looking at Indian hotel numbers, there is a slowdown. Everybody wants to travel. So it's not that everything is bad and everything is great. Yeah, rising tide phenomenon is actually over. It's evident. I like to draw your attention to a name which I know you track. You can choose not to reply. I'll keep it open. Why is Reliance underperforming the way it is?
I don't really have a strong comment on it. I think it still remains a great company, great execution, and phenomenal management. I think it's basically a step. All I want to say is that we've seen the stock move in sort of steps, wherein you have a high capex period, and then when the earnings start coming through and the capex period comes to an end, you see the stock move up, and then again the next phase of capex comes through. So I think if you look at in general the ethos of the company, which is bringing any product that they get into to a price point where the TAM explodes. I mean, whether it's telecom, whether it was polyester in the 90s, 80s and 90s, I think that execution is still, remains phenomenal. The question really is, with the new businesses they've got into, the market is in a bit of wait and watch, especially with what they'll do with green hydrogen and solar. I think they'll do a great job, but again, proof of the pudding is in the eating.
Reliance 1285. Everybody is waiting for banks. Every time you shake anybody and say what is looking good, banks. Even if you don't shake anybody, they say banks. And before you ask what's your market view, buy banks. Yet banks don't go up.
Yeah. I think, frankly, you raise a very valid point with respect to banks. My view is that, you have seen the NBFCs eat into a lot of their business. One. Two, the equity markets have become, until recently at least, now I think deposits have started coming back, but the equity markets ended up becoming a real competitor to the deposit taking side of the banks. So I think you had some of those challenges. And let's not forget, every second promoter that I meet, their goal in life is to reduce their debt or to go to net debt zero. So I think that has become the mantra of corporate India. So we don't see that much private sector capex actually happening even now. You take out the top 10 groups of India, the Reliances, the Adanis, JSW, and some of the cement companies, which are obviously doing big capex, but there's not a whole lot of capex going on. So on the borrowing side, we're not seeing that much pickup. So it's down to retail, and retail, of course, has, as we just discussed earlier on the show, has had its challenges. So the RBI has come down heavily on unsecured loans. So I think there are significant challenges. Do you have a longer-term view on the Indian economy and the Indian banking space? I think I would buy some of these private sector banks.
I wanted to also understand what the outlook is on some of those very prized PSU names at one point. Defense, railways, not so long ago, were really the darlings of the market. How have you looked at the trajectory, and given the government policies, initiatives, what's your outlook on the entire cluster of stocks?
Yeah, that's a good question, because frankly, the whole B2G space was booming over the past 3 years. And I still think the government remains the biggest spender in the economy. And as I said, private sector capex hasn't really truly taken off. But I think the correction was long overdue. And I think the wider correction in the market as well, let me just talk about that for a minute. When the market was going up, nobody was complaining. And when the market started to finally correct, and we've only had a 7.5% rupee correction in the Nifty 50 since the 26th of September, people are starting to, talk about doomsday scenarios. So I think it's a little silly on that part. But back specifically to your question on PSUs, I still think PSUs will do well. There has been a correction in a lot of them. In fact, we were running a screen earlier this week on 1,200 stocks that we usually track, again, sorted by market cap. And we found that 770 stocks are down 20% or more from their respective 52-week highs. 400 stocks are down 30% or more from their respective 52-week highs. And, no surprise, PSUs make up for a lot of those in both these buckets. So, I think if they correct more selectively, a lot of these names could be back in buy territory.
Gautam, so great to have you on the show. Thank you for taking the time out and speaking with us today with your thoughts.